The Employee Retention Credit from the IRS is the last major COVID relief program. Claim up to $26,000 for each employee you had on payroll. This is Marty Stewart with Disaster Loan Advisors. The IRS tax refund is newfound money for your business. Let us help you navigate the ERC program with flexible options and working together. You can relax and have peace of mind that you're in good hands. Stay safe, stay compliant, and keep more of your refund. Take the next step and schedule a free ERC consultation call with us today.
Which employers are eligible for the Employee Retention Credit? As an employer, how do I know if I am eligible for the Employee Retention Credit? Business owners have been navigating the complex landscape of pandemic relief programs and have found it very challenging. One such program is the Employee Retention Credit, designed to help employers keep their workforce on payroll during these uncertain times. If you have not already filed, you can still claim the Employee Retention Credit retroactively in 2023, 2024, and 2025. Employers that are eligible for the Employee Tax Retention Credit ETRC. The Employee Retention Credit is a tax credit that encourages businesses to keep employees on payroll during the COVID-19 pandemic. How does the ERTC works for employers? The Employee Retention Credit is a refundable tax credit that supports small to medium-sized business owners by reducing their financial burden during the COVID-19 pandemic. To take advantage of this benefit, businesses can claim the ERC on their employment tax return through Form 941. If the tax credit amount surpasses owed employment taxes, then any excess funds will be refunded directly to the employer. Significance of the ERC credit for businesses. Employee Retention Credit plays a crucial role in helping businesses navigate the challenges posed by the COVID-19 pandemic. Providing significant financial relief to eligible employers allows them to retain their workforce and maintain a sense of stability during these uncertain times. Moreover, the ERC is fully refundable. If an employer's credit exceeds their employment tax obligations, any remaining amount gets refunded. This feature further reinforces its importance for businesses grappling with cash flow issues amid ongoing economic volatility. Additionally, retaining skilled employees is vital for maintaining daily operations and ensuring a faster recovery of startup business once market conditions improve. Lastly, organizations taking advantage of this generous tax incentive may have more flexibility in allocating resources towards growth opportunities and making strategic investments in areas like marketing or research and development. Definition and purpose of ERC for employers that are eligible. The Employee Retention Credit is a refundable tax credit designed to help businesses keep their employees on payroll during the COVID-19 pandemic. It was established as part of the Coronavirus Aid, Relief, and Economic Security Act in 2020 and extended through December 31, 2021. By offering eligible employers up to $5,000 per employee for wages paid in 2020 and up to $28,000 for wages paid in 2021, the ERC aims to alleviate some of the financial burdens small to medium-sized business owners face during these challenging times. Employer eligibility for ERC tax credit. To be eligible for the ERC, an employer must have experienced a partial or full suspension of operations due to government orders or a significant decline in gross receipts. Partial or full suspension of operations. If an eligible employer's operations were partially or fully suspended due to government orders, they could claim the Employee Retention Credit. A partial suspension involves a significant decline in an employer's gross receipts, while a full suspension refers to the complete cessation of an employer's business operations. For instance, if a restaurant was forced to shut down indoor dining by the state government during the pandemic but could still offer takeout and delivery services, it would qualify for ERC because its operations were partially suspended. On the other hand, if a store had to close entirely due to COVID-19 restrictions or natural disasters like hurricanes and floods, then it would be considered fully suspended and eligible for ERC. Decline in gross receipts. To be eligible for the Employee Retention Credit, an employer must have experienced a significant decline in gross receipts. For example, if a small retail store had $100,000 in gross receipts during the second quarter of 2019 and only $70,000 in the second quarter of 2020 due to decreased sales caused by the pandemic, they would qualify for the ERC under this criteria. It's important for businesses to carefully track their gross receipts and determine if they meet this eligibility requirement before claiming the ERC on Form 941. Government-ordered shutdowns. If your business was forced to shut down due to a government order, you are eligible for the Employee Retention Credit. This includes any mandatory closures or restrictions on businesses due to the COVID-19 pandemic. For example, if state authorities ordered your restaurant to close indoor dining, you would be eligible for the ERC during that period. To claim this refundable payroll tax credit amount, keep track of all wages paid during this closure period and include them in your application for the ERC. Small business exemption. The Employee Retention Credit has a small business exemption that allows businesses with fewer than 500 or fewer full-time employees to claim the credit even if they did not experience a significant decline in gross receipts. This exemption only applies to wages paid from March 13, 2020 to December 31, 2020. However, for wages paid from January 1, 2021 to December 31, 2021, employers must meet either the full or partial suspension or complete suspension of operations test or the gross receipts test. As a small business owner who wants to take advantage of this credit, it's essential to understand how this exemption works and when it is available. Qualifications for ERC in 2022 and beyond. In 2022 and beyond, businesses may still be eligible for the ERC if they experience a significant decline in gross receipts or have partially or fully suspended their operations due to government orders. To qualify for the credit, an eligible employer's gross receipts must have decreased by more than 20% compared to the corresponding quarter in 2019. Additionally, qualified wages paid to employees during this period can include their regular pay, certain health plan expenses, and retirement plan contributions. It is important to note that small employers with no more than 500 full-time employees may claim the ERC even if they did not experience a significant decline in gross receipts. Types of ineligible employers for ERC. Certain types of employers are ineligible for the Employee Retention Credit, including government entities, self-employed individuals, and small business owners who receive PPP forgiveness. Government entities, federal, state, or local government agency. Government entities are not eligible for the Employee Retention Credit. This includes any federal, state, or local government agency or instrumentality providing services. However, government contractors and other businesses contracted to provide services to government agencies may be eligible for the ERC. It's essential to note that eligibility depends on whether the business meets other requirements for the credit. Understanding who is ineligible for ERC is crucial when claiming tax credits, as doing so incorrectly could result in serious consequences such as penalties and interest on underpaid taxes. Self-employed individuals. Self-employed individuals and sole proprietors are not eligible for the Employee Retention Credit. However, your business may still be eligible for the ERC if you have employees working for you. As a self-employed individual or sole proprietor, you may be eligible for other COVID-19 relief programs such as the Paycheck Protection Program or the Economic Injury Disaster Loan. It's important to note that you cannot claim ERC if you receive PPP forgiveness. Small business owners who receive PPP forgiveness. Small business owners who receive PPP forgiveness may be ineligible for the Employee Retention Credit for wages paid to the same employees. The Employee Retention Credit eligibility cannot be claimed for wages paid with forgiven PPP funds, which could affect eligibility for certain employers. However, businesses that have not applied or been approved for PPP loan forgiveness can still claim ERC on eligible wages paid during the covered period if they meet all other requirements. The interaction between PPP forgiveness and ERC can be complicated, but not understanding it could result in missing out on potential tax savings or facing audit penalties. Small business owners should consult a tax professional or attorney to determine their options when considering both credits' implications. Interaction between the ERC and a PPP loan. Employers who received a Paycheck Protection Program loan can still claim the Employee Retention Credit, but wages used for PPP forgiveness cannot be used towards ERC calculations. How the ERC works with the PPP. The Employee Retention Credit can be used with the Paycheck Protection Program, a forgivable loan program offered to businesses affected by the COVID-19 pandemic. However, any wages paid with forgiven PPP funds cannot be used for ERC calculations. This means that if a business received PPP forgiveness for wages paid to an employee, those same wages could not count towards eligible wages for calculating the ERC. To maximize benefits from both programs, businesses should consider using the PPP funds primarily for non-payroll expenses, such as rent or utilities, while using eligible payroll expenses to claim the ERC. It's important to note that despite this interaction between programs, taking advantage of both can greatly benefit small to medium-sized businesses during these uncertain times by reducing financial burdens and protecting employees' jobs. Strategies for maximizing benefits from both programs. Businesses can strategically allocate their payroll expenses to maximize the benefits of both the Employee Retention Credit and the Paycheck Protection Program. For example, they can use PPP funds to cover non-eligible wages while claiming ERC for eligible wages. Additionally, businesses can consult with a CPA or tax professional to ensure compliance with both programs' requirements and optimize their claim amounts. Calculating the ERC. The ERC is calculated based on 70% of qualified employee wages. There are specific limitations and requirements for what qualifies as eligible wages. To learn more about maximizing the benefits of this credit, continue reading. Maximum and refundable amounts of the ERC. The maximum and refundable amount of the employee retention credit a business can claim depends on the particular tax year. For the 2020 tax year, eligible employers can claim a maximum credit of up to $5,000 per employee. In contrast, for the 2021 tax year, eligible employers can claim up to $28,000 per employee. It's important to note that any excess credit beyond what an eligible employer already owes in employment taxes is fully refundable. For instance, let's say you're eligible for a $10,000 ERC but only owe $8,000 in employment taxes after adjustments and other credits have been applied. The remaining $2,000 would be refunded by the IRS after filing Form 941. Qualified wages. To be eligible for the employee retention credit, businesses must pay qualified wages to their employees. Qualified wages refer to compensation paid to an employee during the eligibility period, which starts on March 13, 2020, and ends on December 31, 2021. For the ERC in 2021, qualified wages are capped at $10,000 per employee per quarter. This means that a business can claim up to $28,000 per qualified employee's wages for the entire year. Business owners should keep accurate records of all payments made as qualified wages since it impacts their eligibility and the maximum amount of credit claimable. Business size limitations. Small businesses with fewer than 500 employees are generally eligible for the employee retention credit. However, as of January 1, 2022, businesses with no more than 500 full-time employees in each calendar quarter in the preceding calendar quarter or year may also be eligible for ERC. It's important to note that larger employers with more than 500 employees may still be able to claim the ERC under certain circumstances. For example, if their operations were fully or partially suspended due to COVID-19 restrictions or experienced a significant decline in revenues. How to claim the ERC for eligible employers. To claim the ERC, eligible employers must file Form 941 and maintain proper record-keeping practices. Understanding the claiming process is crucial in maximizing benefits from this tax credit. Filing Form 941. To claim the employee retention credit, eligible employers must file Form 941, Employer's Quarterly Federal Tax Return. Here are the steps to follow when filing Form 941. 1. Fill out Form 941 for the relevant quarter in which qualified wages were paid. 2. Enter total wages paid to all employees during the quarter, including any qualified wages claimed for ERC. 3. Calculate and report the employment taxes owed for the same quarter before reducing it by any ERC claimed. 4. Subtract the ERC amount from employment taxes owed and report the result on line 13B. 5. Claim any remaining ERC as a refundable credit on line 13D. It is important to note that employers can only claim an ERC once per wage payment on Form 941 or by filing an amended return. Also, employers who received a Paycheck Protection Program loan cannot claim an ERC for wages paid using PPP funds that have already been forgiven. By following these simple steps, small to medium-sized business owners can easily claim their eligible employee retention credit on their employment tax return, maximizing benefits and protecting their businesses during uncertain times. Record-keeping requirements. To claim the employee retention credit, eligible employers must keep records supporting their eligibility, including proof of qualifying employee wages. These records should include payroll tax filings and payment records, canceled checks, and other documentation that supports the amount of qualifying wages paid. Proper record keeping is vital to support ERC claims and avoid potential penalties from audits or inquiries from taxing authorities. Employers should consult with an experienced tax professional to ensure they understand all necessary record keeping requirements related to ERC claims. Deadlines and timelines. Eligible employers must file Form 941, Employer's Quarterly Federal Tax Return, to claim the ERC. The deadline for filing this form is at the end of the month following each quarter. For example, the first quarter advance payment deadline is April 30th, covering wages paid from January to March. It's important to keep accurate records of your payroll and employment tax deposits to ensure that you're claiming the correct amount of credit. Additionally, businesses should retain all documentation related to their eligibility for at least 4 years after receiving payment from the ERC in case of an audit. Benefits of ERC for eligible employers. The benefits of ERC for employers include reduced financial burden, protection of employees' jobs, and potential tax savings. By understanding the eligibility requirements and maximizing the benefits from ERC, businesses can protect themselves and their employees during uncertain times. Reduce financial burden. The Employee Retention Credit offers eligible small to medium-sized businesses a significant financial benefit. This tax credit aims to reduce the financial burden on employers who have faced a decline in gross receipts or partial or full suspension of operations during the COVID-19 pandemic. By claiming this credit, eligible businesses can receive up to $5,000 per employee for the 2020 tax year and up to $28,000 per employee for the 2021 tax year. The best part is that it's fully refundable, meaning any excess is refunded directly to the business. Protection of employees' jobs. One of the significant benefits of claiming the Employee Retention Credit is that it helps small to medium-sized businesses protect their employees' jobs. By providing financial support to employers, the ERC enables them to retain their workforce during these uncertain times. Moreover, as employers retain their workforce with the help of ERC, this leads to increased employee loyalty and higher levels of job satisfaction. Employees who know they have job security may be more productive and committed to carrying out their duties. Additionally, when a business retains its experienced personnel instead of hiring new ones later on after recovery from pandemic-induced economic challenges, additional costs related to recruiting, training, or induction processes can be avoided. Potential tax savings. The Employee Retention Credit offers small to medium-sized businesses the opportunity to receive a significant tax benefit. The credit is calculated based on wages paid to employees during the pandemic, and that amount can be used as a credit against employment taxes. This means you could owe less in taxes or even receive a refund for any excess credit. For example, if your business qualifies for $50,000 in ERC and owes $40,000 in federal payroll taxes, you will only have to pay $10,000 out of pocket. Any remaining amount over what you owe will be refunded directly back to your business. Common mistakes employers make with the ERC program. Employers often make mistakes related to state tax implications, impact on employee benefits, and record-keeping practices when claiming the ERC. Understanding these errors can help you maximize benefits from the program and avoid potential issues down the road. State tax implications. It's important to note that some states have versions of the Employee Retention Credit, so it's crucial for small to medium-sized business owners to understand how state taxes may come into play when claiming this credit. Additionally, employers need to know how claiming the ERC may impact other state unemployment or workforce programs they are enrolled in. Understanding how the ERC interacts with state taxes is essential for maximizing potential benefits and avoiding unintended consequences. Impact on employee benefits. Employers who claim the Employee Retention Credit should consider how it impacts employee benefits. The ERC is calculated based on qualified employee wages during specific quarters, including sick and family leave payments mandated by the Families First Coronavirus Response Act. For example, if an employer claims a credit for providing paid family medical leave under the Tax Cuts and Jobs Act of 2017, they cannot include that amount when calculating their ERC. It's important for employers to carefully track all wage expenses to ensure they accurately calculate their eligibility for credits and avoid double dipping that could result in penalties or audits from the IRS. Record-keeping practices. Good record-keeping practices are essential for businesses claiming Employee Retention Credit. Accurate and detailed records of employee wages, including dates paid and amounts, must be maintained to support a claim for the ERC. Employers should also keep track of any partial or full suspension of operations, government orders that affected their employer's business operations, and gross receipts data. Having well-organized records will help with ERC claims and come in handy during IRS audits or inquiries. It's important to note that businesses have up to 4 years to retain employment tax records related to the ERC. For example, George owns a small retail store and wants to claim the ERC for 2021. He keeps detailed records of his employees' wages from March 13th through December 31st, along with documentation regarding his gross receipts decline due to COVID-19 restrictions. Overall, good record-keeping practices can save time and potential headaches when claiming and complying with IRS regulations related to the ERC. Conclusion and summary: answering which employers are eligible for Employee Retention Credit. In conclusion, understanding the eligibility requirements for the Employee Retention Credit is crucial for small to medium-sized business owners looking to alleviate financial burdens and protect their employees during these uncertain times. Businesses can take steps towards recovery and stability by maximizing benefits from ERC and other available programs. Importance of understanding ERC eligibility requirements. As a small to a medium-sized business owner, understanding the eligibility requirements for the Employee Retention Credit is crucial in maximizing benefits and avoiding costly mistakes. The ERC is a valuable tax credit that can provide significant financial relief to eligible businesses during uncertain times. To avoid any issues with claiming the ERC, it's essential to understand the eligibility criteria thoroughly. For example, businesses must demonstrate a significant decline in gross receipts or have been partially or fully suspended due to government orders during specific periods. By staying informed of these eligibility requirements and taking advantage of resources like the IRS's ERC Eligibility Assistant Tool, small to medium-sized business owners can ensure they are making informed decisions about applying for this critical tax credit. Maximizing benefits from ERC to protect businesses and employees during uncertain times. As a small to medium-sized business owner, maximizing the Employee Retention Credit benefits can help protect your business and employees during these uncertain times. One strategy is to combine the ERC with the Paycheck Protection Program for increased financial relief. Using both programs can reduce your overall financial burden while keeping your employees on the payroll. Another way is to ensure that you are claiming all eligible wages paid to employees from March 13, 2020 to September 30, 2021, or until December 31, 2021 for recovery startup companies. You should also maintain accurate records of all qualified expenses related to employee retention and claim the Employee Retention Tax Credit on Form 941 promptly. Good news, there is still time to file. The Employee Retention Tax Credit can still be claimed retroactively, and there is still time to file, even in 2023, 2024, and 2025 for the past tax years.
As you can see, navigating the Employee Retention Credit program is very complex and confusing to try to figure it out on your own. Even on the IRS ERC FAQ pages, it says, "This page is not current." There have been several years of updates and changes to this IRS tax credit already, including 4 congressional acts and 5 updated guidances from the IRS, totaling over 3,900 pages. Who has time to sift through all that information, let alone decipher some of the confusing language and rulings? In order to stay compliant with current IRS ERC rules and regulations, expert specialized help is highly recommended. Even if your business received an SBA PPP loan, you are still eligible for the ERC credit. If you think you may not qualify, it's worth a conversation to see if your business does. Let us assist you with a complete employee retention credit process, or if you might be stuck on filling out the IRS 941X forms correctly on your own. We are here to help. Stay safe, stay compliant, keep more of your refund. Email us at support@disasterloanadvisors.com or call us toll-free at 877-463-9777 extension 3. Or visit us on the web at www.disasterloanadvisors.com/ERC for complete details on the Employee Retention Credit Program for your business.